Have you ever wondered who really controls America's money? Stay with me until the end of this video, because what you're about to discover may completely change the way you see America's financial system. Most people assume the President of the United States can simply decide to print more dollars whenever the country needs them. It sounds logical, but it's completely wrong. Behind the world's most powerful currency stands an institution so influential that a single announcement from its leaders can shake global markets, change the price of gold, move stock exchanges, and affect the lives of billions of people. That institution is known as the Federal Reserve. Its story begins in the early 20th century. At the time, America's financial system was in chaos. Banks were collapsing, businesses were failing, and people were losing their life savings. Every major financial panic pushed the country deeper into uncertainty. The crisis reached a breaking point in 1907, when one of the worst banking panics in American history spread fear across the nation. Crowds rushed to withdraw their money, banks struggled to survive, and the government realized that the country needed a stronger financial system before another disaster struck. After years of debate, Congress passed the Federal Reserve Act in 1913, and President Woodrow Wilson signed it into law. For the first time, the United States had a central banking system designed to protect the economy from future financial disasters. Its mission sounded simple: keep prices stable, support employment, supervise banks, and maintain confidence in the financial system. But over the decades, the Federal Reserve became far more powerful than anyone had imagined. Today, it has one of the greatest responsibilities in the global economy. One of its most important tools is the ability to change interest rates. When inflation rises too quickly, the Federal Reserve usually raises interest rates. Borrowing becomes more expensive. Families spend less. Businesses slow their investments. Demand begins to fall, helping reduce inflation. But when the economy weakens, businesses close, and unemployment rises. The Federal Reserve often lowers interest rates. Loans become cheaper, companies invest again, consumers spend more, and economic activity begins to recover. Sometimes, just a 0.25% change in interest rates is enough to send financial markets around the world into motion within minutes. But the Federal Reserve's influence doesn't stop at America's borders. The US dollar is the world's dominant reserve currency. It in international trade, global banking, energy markets, and foreign exchange reserves. Because of that, decisions made inside the Federal Reserve can affect economies from Tokyo to London, from Dubai to Sao Paulo. Investors, governments, and central banks around the world closely watch every speech, every meeting, and every policy announcement made by the Federal Reserve. Its influence became especially clear during the 2008 global financial crisis. As banks failed and financial markets collapsed, the Federal Reserve took extraordinary steps to stabilize the economy. It cut interest rates, provided emergency funding to financial institutions, and launched massive programs to keep credit flowing through the system. Years later, during the COVID-19 pandemic, the Federal Reserve once again stepped in with historic measures, injecting trillions of dollars into financial markets to prevent an even deeper economic collapse. Supporters argue that these actions prevented devastating economic disasters. Critics believe the institution has accumulated too much power and that its policies can increase inequality or create new financial risks. The debate continues to this day. Yet one fact remains impossible to ignore. Very few institutions on Earth have the ability to influence the global economy the way the Federal Reserve does. Every time inflation rises, markets become unstable, or recession fears begin to spread, the world waits. Not for a president, not for Congress, but for the next decision made inside the Federal Reserve. Because sometimes the future of the global economy can change with a single announcement.